As a professional winning trader, I'm going to show you how I personally use stop losses and how you should view stop losses because a lot of us get very upset when we get stopped out. But I have something new that you need to hear that's going to change your mind about stop losses forever. And when it comes to trading, whether you're trading crypto, stocks, Forex, any type of market, a stop loss is necessary unless you are an investor. Maybe you wouldn't use a stop loss then, but if you're trading high frequency trading, you're trading futures markets, fast markets, you will need a stop loss because if you do not put a stop loss, you will lose potentially all of your money. And this is the number one rule, honestly, for me, for my students, that you need to implement into your trading, into your life, because without a stop loss, you are likely to get liquidated, to lose lots of money. And it took me years to honestly learn this lesson where I can consistently implement a stop loss and protect my funds. You need to protect your funds at all costs. But let me go ahead and show you stop losses, how I use them, and how you should view them. This is the most important thing because trading is psychological, and the way you view and understand events when it comes to trading is going to help you to further your success in trading quite rapidly. Now, when using a stop loss, the context is going to be different, and the way you should use a stop loss is going to be a little bit different based on what you are trading, what type of market you're trading, because some markets are thin, some markets are more thick, they have more volume, more volatility, and some markets barely move. Especially in bear markets for crypto, they move a lot different than a bull market and a voluminous market and a trending market. The way I use my stop losses are a little bit different, but the whole strategy is going to remain the same for the most part. Now, the way I trade, I am an aggressive trader and I like to try to catch the tops and bottoms of markets because the closer you are to these exact pivot points, the bottoms and tops of markets, the more profitable you can become. So when I make my trades, sometimes I can get stopped out a couple of times before I catch my trading. Usually my trades, when I'm catching these big moves from the very top and bottom, they will profit me massively, even though I might take a couple of losses in order to obtain these incredible entries. Okay, here's an example on Ethereum. Ethereum had crashed. I caught this short, a good portion of this short, and it went down really big and went up really fast. So I ended up catching a long here somewhere in this region here. I was very aggressive, and there is a high risk when it comes to being an aggressive trader, but it also has the highest payouts. So I'm not advising you to be aggressive or to use my strategy, but this is how I personally trade. Now, I ended up catching a long position here, and in any of these big moves, I just like to honestly adjust my stop loss. I'll put my stop loss right below the wick, maybe sometimes right at the wick, but just a few ticks below or above a wick like that. I'm making a lot of entries. The best entries, the best trades for me are the big voluminous trades where they create big wicks. So here we have a big wick on the bottom. I also had shorted near the very top of Ethereum, and we see big wicks, especially we go to the 4-hour time frame, we see big wicks up there. And I put my stop loss here, and I just put it a few ticks, maybe a little bit above this position here, right above that wick, the end of that candlestick, the end of the wick. These are where I technically, and a lot of times, will put my stop losses in these type of environments. For instance, I had entered short on Ethereum here. I put my stop loss right at the wick or maybe a few ticks above. I do recommend actually moving your stop loss a few ticks above sometimes. If I'm trying to move very quickly, I will just put my stop loss right at the end of the wick until I can take a look at the price action to see how everything is going and just move it a bit above. Because let me give you a pure example here. So Ethereum had pumped all the way up and I was looking to short here. And what if I just had entered short here, put it a few wicks above? I would have got wicked out and then the market crashed in reverse. And this is going to work out for stocks, crypto, Forex, it doesn't matter. So when it comes to your entries, stop losses are a part of entries. You need to, especially in a very strong market, a very strong uptrend or a very strong bull trend, you need to start to see the beginning of a breakdown. You want to start to see the market structure begin to break down, whether it's bullish. If there's a bullish move, you want to start to see bearish market structure form, which if we go to the 5-minute time frame for Ethereum in this particular instance, we do see bearish market structure forming. So here we had the uptrend continuing. And at this point, we're forming lower highs, and then we start to form our lower lows. And that gives us a possible entry that the bearish market structure is forming. And then we can make our entry. We put our stop loss above this tick. If you'd have entered aggressively here, it would have taken you out and then reversed. So stop losses are typically where markets will actually reverse. The market makers, the whales, the people that are moving the markets, they will typically move markets into liquidity, which is where stop losses are, liquidations and other levels, where people's stops are, and then they will typically reverse because this is providing the liquidity for these people to sell, and vice versa. It works on the very bottom. So this is pretty much how I use my stop losses. You want to wait, especially if you're being aggressive. Wait for that move to start. Like if it's a very bullish move, a very strong move to the upside, wait for the move to calm down a bit and start to form some bearish market structure, and then to make your entry and then to adjust your stop loss there. And I always put it pretty much right at the wick, a little bit above the wick, because there will be times, even with that entry, you're waiting for it to cool off. There will be times that the market can come up just a little bit and take you out and then finally go. But usually when you see a top of a market or a bottom, what you will see is that there can be a consolidation, and then everyone's looking like, okay, we're all going to short this. We're going to put our stops here. We're going to put our stops there. Then they make another final sweep before they continue going down. And this can happen actually not only twice, but it can happen 3 times. They can do 3 moves and even go down, and even more sometimes. So just be aware of that. And even if you get stopped out in these instances and situations, you have to still be on board with your plan. Because you are wrong, it doesn't mean, okay, I'm done for the day, I'm quitting. No, don't do that. You still have to be aggressive. You have to get in there and fight for your trade and for your money, because your job is to take money from these people who are very smart and typically smarter than you. They have a lot more information regarding the asset that you're trading that you do not know about. So it's like a fight. It's like an arena when you're in there trading, and you need to fight for your wins. So basically, if you get stopped out and you still believe your plan is right, continue believing your plan is right, but waiting for the market to give it back to you. And another thing when it comes to stop losses, the way you need to view stop losses is stop losses are your very best friend. For instance, let's just say I shorted, this particular asset right here. I end up getting stopped out. I put my stop loss here or somewhere in this region. I get stopped out. Okay, boom. I get stopped out. I lose money. I lose a trade, and the market goes all the way up, or it could go all the way down, depending on how you're longing or shorting the market. But look, what the market is doing is being your best friend. The stop loss is your best friend. The market is saying, hey, you got stopped out, but look, let me give you a better entry. You can still go with your plan, but I'm going to give you a better entry with a better position so you can make even more money. So even though maybe I got stopped out here, I can re-enter back at the top and make all of this back in just a small move and a whole bunch of profits. So stop losses are your very best friend. View stop losses as a gift to the market, allowing you to enter in a better position so that you can make more money. So we went over where to put your stop losses. You want to typically enter at the tops and bottoms of moves. But if you get stopped out, they provide better opportunities. And you want to wait when you're making your entry, even if you're being aggressive. You want to start to see that bullish or bearish market structure forming, or that reversal, which is what I'm talking about, forming before you make your entry, and then you put your stop loss just a little bit above the high or that low of that position. If you guys got something out of this video, please give this video a thumbs up. Make sure you are subscribed and notifications on, and go ahead and share this video to your friends and family on Twitter, Facebook, Instagram. That's going to be it. Check all the things in my video description if you want to help, if you want to learn how to make money. I have a course, I have a school, I have a whole bunch of things to help you guys make money. I am a professional crypto trader. I do trade equities and other things like that, but my main focus is crypto.